Good morning, everyone. Hope you guys had a great weekend. I made it somehow. Oh, I'm glad you made it, John. I didn't understand why you said you couldn't, the credentials and all that, but maybe it was just the weekend. Anyway, so here we are. Market opening up, following through to Friday's end of day rally there. Remember around 1 o'clock, bears threw in the towel and markets rallied up to the high there. And so market opens up. When it opens up, we look at, well, where is it? Where is it to the left? Look at multiple time frames. And the 50 MA on the futures are lurking right overhead with the 20 coming over the top. So this convergence of moving averages is sometimes we look at that as being a stiff area of resistance where those moving averages come together. Of course, oh shoot, my brain's a little slow here for Monday morning, guys. Here we go. All right. So there are the charts. Okay, so I was saying the converging moving averages, when they do come together, you can initially look at them as what will be a stiffer reference point of prices, in this case, to get through as resistance. But that's subjective, kind of like, okay, I've got two moving averages there. And if one could be resistance, well, two should be stronger resistance. I used to think that until I saw prices blast through them at times like they weren't there. Other times it worked, which led to obviously more confusion. So we look to the left and see what is in that area and see if sometimes there is congestion clustered there and sometimes there's nothing. So we just simply look to the left, 3360, go over to the 60-minute chart, see if there's something there. Well, lo and behold, there's a cluster of pivot highs there. So that will make sense that should it hit that 3360 area, as it's moving up here, really hasn't shown any significant signs of loss of momentum. The range is beginning to expand, but it could expand further right into that area. And that's where there's going to be sellers up there as we look at that. How many? I don't know. We'll see when it hits that area, how many show up and what happens from there. So far, this little retest pattern and the blast off has followed through to the upside. The daily's in a downtrend. It would be the ideal place to make a lower high and then come down again. We shall see what the reaction is when it gets there. It's that simple. Good morning, Germano, and all of you on YouTube. Nice. Lots of good mornings this morning. That's nice to see. All righty, let's take a look at the Qs, NQs that is, and getting hit right on top of the head with the 20 there. And in this case, there's nothing there. So you see the subjectivity of moving averages. We use them, but we know they're false. Right? It went through the 50. The 50 was just above that high there. That's yesterday's high, and it's moving up. So just looking at this chart, it would say, well, these have the ability to go all the way up here until they get to that resistance area. Maybe they will, maybe they won't. So that's one of the reasons why we look at different markets. So when the S&Ps hit resistance, do they put a stop on the Qs moving higher? Do the Qs create an area of resistance here? Meaning there's nothing here right now as I look to the left, nothing at all. That doesn't mean it can't create a pivot and a retest and then start to go sideways. But right at the moment, it looks like it should go up there, but we look at different numbers. What number is the NQ so I can work on my chart quickly? Well, let's do this. The high there is 11,536. So we'll just call it 500 to, I don't know, between 500 and 550 times. Sometimes they overshoot. You've got the highs clustered up there. So you've got a whole bunch of them, which is this area right there. YM has been the laggard, and it's got room to go up. Well, it's at this high. Well, it's just above that high. So as it's going up, get a little bit of a range expansion, just like the others. As it's been going up here, let's look at the 15. It's beginning to lose some momentum. You can see the distance between the pivot highs, but no significant turn, no break of major support. Like a break under here would be a short-term weakness. There's that same area right there. So I can look at that for you guys on the S&Ps. So 33.27 would be first major support there on a 5-minute chart, which is going to be the same on the 15. And you can see there are no pivots on the hourly because it's compressed too much. So the smaller time frames are useful in that way. And also, this is the the concept of a greater than 100% retracement. So as this bottomed out here and moving up, right, we have where the actual stop point should be. And then we have other concepts, one called greater than 100% retracement. And what that says is when prices have retraced greater than 100%, it's likely a place where prices will stall. And then you wait to see, does that concept actually play out? So it is for the moment, but you've got this swing high right there for the S&Ps. So let's call it 33.26-ish. Yeah, 33.26 and a half would be a break of the uptrend on the 15-minute chart and on the 5-minute chart. That would be some short-term weakness right there. Russell bouncing up as well. It's got that resistance right here. These highs just under 1,500. And yep, that high right there. That's right at the top of that big red bar. It's impressive. It's impressive, but it's still in a downtrend. So downtrends can have pretty sizable rallies. That doesn't change the fact that it's in a downtrend. And so just looking at this as a point, well, we just kind of like eyeball the halfway point. So right around there, maybe you can peekaboo about 1,500, but looking at where it's at to the left here intraday, we'll see what happens when it hits that. So this one is the closest to its resistance area. Bonds still doing nothing. Just slopping back and forth here. Nothing to say. Chart's just a mess. Oil. I got to change this contract. I think I did. Is it November? This problem with this one uses the letters, and NinjaTrader uses actual monthly dates. Anyway, let's take a look at this. Okay. Yeah, we'll get to SPX. Well, this had that crazy data in there. So impressive move up. I don't know. I just don't see anything here that looks attractive to me to play in this market. If this market continues up, it's like hard to imagine a drop like this, but we have seen it. And then be able to go back up to the high. That would be incredible. Versus the normal would be an M top here and then lower. We'll just have to see how that plays out. Gold, as you know, or if you don't know, got clobbered last week. It's just somewhat similar to this pattern in oil that I talked about a couple of weeks ago. And I said, this big drop like that in this consolidation, it's not a great place to get short because it's extended and it's created the void. But if you were to get a correction bar, then it's okay. Meaning if this bar here were to turn into a topping tail bar, it tells you how strong the sellers are. And then you can short it with a correction bar. Now, while it's not the exact same pattern, you can see the momentum move, and this could actually turn higher, just like oil did. But if we were to get a correction bar, meaning it pops up and turns into a topping tail, or you get a green bar where you get a bit of a range expansion followed by a big red bar. Those two scenarios are called correction bars, and we look for then measured moves. And so down, stabilization, and then continuation, and it's got the void. And Ludwig, I didn't get to read your email in detail, but I believe this was part of what your question was. So we look for an initial move, and the stabilization can be basically in the middle of nowhere. Maybe there's some moving average here. Maybe there's some fib line, who knows what. Right. So in the MTS course, I just referred to it as some subjective reference point, which is basically like having nothing there here, right? Or maybe there actually does have some support, but then it, because of the big move down, it then forms what we call a correction bar or a correction pattern, where it attempts to go against the power in the move and then fails. And then you get a measured move to the downside, which would put it somewhere down here. All right, silver, basically the same pattern. It dipped down and buyers stepped up there again. So for intraday traders, they might consider this, these kind of patterns on the long side. And so the transports here, which have been showing relative strength for a change, you really need to put an alert under this low, because you can see this topping pattern, head and shoulders type of top. So if this can continue to move up here, I mean, this downtrend on the daily and this weekly, I'm kind of referring more to the S&Ps here, this weekly buy setup, which I'm hoping personally that all of this downtrend continues down, and this buy setup that's beginning to occur here actually fails, and we get a measured move down here to 300. And I only, that's not my bias per se right now. It's more of a wish list, if you will, because this is a significant support area. A bigger correction brings more fear, more sentiment, and a lot super bullish sentiment would be you'd have a lot of those wrong way option traders betting on a crash at that point. And I think, the further you get away from resistance, and especially if it accelerates to the downside, which is what the perfect scenario would be, creating a big void, the bigger the move is going to be to the upside. What we have right now, this beginning of a turnaround, this has got to deal with this mess over here. So I'd prefer the move lower, because it opens up the potential for a bigger move higher. We'll see where today goes in the end of the week, of course. So SPX, let's go back here. So let's just figure that this low is going to be like, for the next couple of days, just going to be like a steel wall as far as support goes, because if it's not, that acceleration to the downside is going to happen now that prices are up where they are. So 333 up here near resistance. Anything below here, if there's any premium, I would call it a no-brainer. And considering that price is up here and I want to get away from the danger, right, let's just call no-brainer areas above this 342.43 area. So this pivot high and this pivot low, and then you go in between those areas. So let's do this. So that's right up here. I wasn't sure, but that's right up there. So now let's go SPX and look at the same reference points, right, which would be up here, right, 34.25. So anything above there and anything below 3,200, it should be, well, I will use the word free money very, I don't know the right word with SPX, because of the leverage. If it gets anywhere near there, believe me, it's going to be painful. So again, below 3,200, number 3360. Let's go back to SPX. $33.40. Well, you see the areas up above here. There isn't much to stop them. That's the whole problem. So down below here, the gap up, basically they're in the middle of no man's land, so to speak. And I think I would wait for some kind of intraday topping or bottoming pattern. And you know that the passing of time eats away some of that premium. But if you're more aggressive and you go for it, you know the risk if you get on the wrong side of this. So 30, 3,200 for Wednesday, I would say should be, assuming that today acts normal, so to speak. There'll be some selling somewhere along the line today, but in no means should it get it all the way back down there. Um, you know, not under a normal condition considering where they're at. So yeah, down there would be the safe area. All yours, Dan.
All right, good morning, everyone. So it's not free money, it's a very high probability setup. Because that's just the way I talk, nothing's free. It's skill, knowing that it's a great trade setup. All right, we are 100% bullish positions in both letters. We have a ton of them. We were adding a lot of put spreads Friday afternoon. They all look great. I've been tightening stops pre-market. And I also sent out a text alert saying on our new long trades, we're going to just hold off. We'll assess them one by one. And I had 100% longs in the letters. And I even said, look, we're short-term bullish. The charts are a mess. We're rallying in a downtrend. We still have this ugly red bar, but we have a buy setup on the weekly. We have a bearish monthly. We got September, October on our hands. We got all kinds of things going on in the world. And now with the gap up, I went through and I've tightened stops on everything. So if you need to ask me, if you aren't a paid member and not on our Telegram, then you have to ask me. I've tightened a ton of stops. Let's see. YouTube's asking about Vasquez. Do you ever scalp vertical spreads on days of high? Of course. Do I ever scalp vertical spreads on days of high volatility? Well, a couple things, Vasquez. I don't care if it's high or low volatility. We're always trading if we have a setup, and if it's a liquid option, whether we want to do a directional or sell a put spread. But yeah, we do everything when it meets our setup. Oliver's asking about ZM, time to short the bounce. Let's look. The answer is no. No. He's asking me, would I short this bounce in Zoom? No, I mean, it got climactic. It had a 1-day pullback, and now it's gapping up with a bullish pre-market. So no, there's no potent reversal yet. So no. A Mark Bat21 is a new subscriber here. I'll introduce you all later, but okay, there, you finally figured it out. All panelists and attendees. Zoom, well, it's... No, it's not a swing long to us. Why? Well, because there's no swing long pattern. We actually gave it as a swing long right here. That was a gap reversal breakout. It's a bullish day trade setup is what it is. But even day trades here, I'm not going to be rushing into anything with this big gap up. I don't like big gaps for new positions. If we're in them, we're getting the beneficiary of that today. AZM. Gideon, also, if you'll put your drop down, all panelists and attendees, he's asking about AZN. It's in a kind of a trading range. I see nothing. You got a bullish reversal on Friday. Now it's gapping down in a strong market. So I see nothing to do with it. Shill 5185. I mean, it's a bullish gap. That turned out to be a downside shakeout because it's right back, but there's no pattern. What's the pattern, Jake? It's gap and resistance. You can sell an out of the money put spread. Space. Yeah, I actually looked at this to do a put spread in the weekend letter. Just because of this tail retest I found interesting. Now it's gapping up. I got an upgrade, but still there's no pattern. It's gapping. Well, it's a bullish gap, so this could set up to be a long-term bottom. That's one of the ones I monitor all the time. But that's a big percent gap. So we gotta see how it churns and sets up. Camera on Workhorse, we're actually in Workhorse already. And we didn't get filled on the 25 cent to close on Friday. I said that in the video, so I did change the stop on that. So there's the new plan on Workhorse. I got an email from a subscriber today saying, "Hey Dan, you're sending out all these text adjustments. Are you saying quotes for options?" And I said, "No, because they're closed. I mean, they're old." But I said, "Look, read the adjustments. All I'm doing is adjusting these stops. I'm giving some targets. I'm just saying bid a dime. Let's see if we can get out of this thing at 80% of profit and move on to the next bus." All right, let's continue here with gappers. All right, this little guy was gapping up huge. Now it's coming in. Looks like a penny stock toy. SYKS, beautiful, beautiful igniting bar on Friday. Wow. Now it's gapping down. This Wednesday we're going to be talking about climactic patterns. These things that go up like a rocket. They it's not a swing short pattern because it's an igniting bar from a base, but intraday. YouTube's asking about Workhorse. No, I'm sorry, Upworks, UPWK. I think I was looking at this actually on Wednesday. It had the breakout, and then it got slammed back into the base with a bottoming tail, which is actually fine. And then it had the wide range breakout. It trades kind of sloppy, so you would have to give it a big stop like Friday's low. But it is a breakout. It is a breakout daily, weekly. INO. Yeah, this has to be a bio. It's getting its head chopped off here. It's gapping the support, but it's very bearish pre-market. UPS swing long. We're in. It's a big gap. It's gapping up over $4. We have a put spread on this, and my move stop to the 30-minute low. Yeah, PLL is on my list for sure. I have it here in the bottom right already. Look, it's already a climactic salsa, and this one I will put in. I'm going to put this one in our lessons for Wednesday, because that's a wide range climactic cell setup as it is. But then we would have dropped to a smaller time frame, and it gave you no setup. Look, that's still a bullish 15-minute chart. Now, I don't know what the news is, nor do I care, as long as it's not a buyout. If any of you know what the news is, tell me, just because I don't want to mess with a buyout. But absolutely, I'm looking to short that. I mean, I think you got rocks in your head if you would not want to sell into strength on that. I mean, think about that, folks. It ran from $6 to sell lithium to Tesla. All right, but just use common sense for a second. You have something that ran from $6 to 37. No, exactly right. No, Tehran, that's exactly what I was going to say. Is that the only reason on planet Earth, if you had a brain, that you wouldn't want to sell is if you thought it was going higher, correct? So you said it as a joke, but you're correct. That's the only reason you wouldn't sell. But guess what? We aren't pigs. So could it rally another $20 from here? Could it go to $57 in the next 20 minutes? Absolutely, it could. I'm not jumping in front of a freight train, but it's on my list to watch it. All right, so PLL putting. Yeah, so folks, I mean, you know our strategy. We have a lot of longs. I'd be looking to sell in the strength. I'm square. I said 5-minute low. We'll sell half NVIDIA. Yeah, we just have a put spread in NVIDIA. But I said in the afternoon, it looked fantastic for a bull call debit spread. Yeah, I'd be selling in the strength here. So ask me if there's anything you're in, but I'm not really interested in new trades right here, unless it might be a short. Wow, look at the tick gapped open to 1600. My gosh. Coke for Arnold. No, Arnold. Arnold, I'm not sure if you've had our Greg's swing strategy course or what time frame you're looking at, but on the daily, there's absolutely no compelling pattern whatsoever. It's gapping up to the top end of a nasty bar. 15-minute chart. Okay, 15. You know, it's right here at resistance with an overbought gapping market. So it's just not a high probability setup. We can, in my opinion, we can find much better ones and, you know, and time it with the market on multiple time frames better. All right, Alex is selling the strength, which is what I would be doing. TDGT. This is superior pattern than Coke. It's breaking out of a trading range, bullish 15-minute chart. The volume kind of looks weird. Like, why isn't this bar moving? But that's a beautiful chart right there. I'm personally not doing it just because, you know, Monday I like to even wait 10 minutes as opposed to my normal 5 minutes, but I got PLL on a different chart, so I will put this one here. MDLA. It's a bottoming pattern. Yeah, it's a place to do it. You know, relative weakness, obviously, to the broader markets, right? This thing wasn't rallying with the market, but it's the place to do it. Yeah, I was looking at Microsoft also for the put spread over the weekend, but the juice wasn't there. But yeah, I like the downside shakeout. I like the higher low. Price void, yeah, I like Microsoft too. Sure. Yeah, so I like this TDGT and Microsoft. So, you know, as long candidates, if you're so inclined to want to buy.